Welcome to the Risk Reversal Podcast. I'm Guy Adami. That, of course, is Elizabeth Thomas. She of SoFi. She, of course, of Milwaukee Brewer fandom. Milwaukee Brewers can
What? I
continue
can't.
to be.
I
Yes, you can
can't
do
have
that.
a physical
No,
reaction to
you can
that.
do that. It's a physical reaction. And you know what? You're entitled to it because your Brewers are just, you said it before the show started. You're doing it for Bob Uecker.
Doing it for you. I said it earlier in the season during one of these that everybody had been talking about something magical going on in Milwaukee. This was during the regular season. I think it was in the midst of their 13-game winning streak. And there's still something magical going on. Now, we're just one game into the playoffs. I believe we have to win 11 in order to win the whole thing. Not that anybody's counting, but we're one in. And the first one went well. The first inning of the first one went well. It was 6-1, I think, at the end of the
Before you
first
got in your
inning.
seats, as they say.
Yes, and my family was there. Everybody was so excited, and I'm excited for this one too. So late game tonight against the Cubs. And you know what else I got to say? Anybody who's listening that's a Cubs fan, I'm sorry about what I'm about to say, but a lot of times Miller Park, I'm still going to call it Miller Park, gets referred to as Wrigley North. Not this time, folks.
Not this
The Brewers
time, people.
fans did not sell their tickets. They kept a hold of that stadium, and I hope they do it again. I am proud of them for that.
You know what? And as you should be, I'll say before we get into the markets, a lot of Red Sox fans showed up in the Bronx, much to my chagrin. So, yes, the Brewer fandom are acquitting themselves extraordinarily well. You mentioned Bob Uecker. I did. A legend in the sports world, legend in the broadcasting world. Paul Tudor Jones, a legend in the investing world. And
Yes,
he
he
was
is.
speaking with Andrew Rohr Sorkin on Squawk Box. And he said some things that alarm bells that he's been talking about, but I think this time more so, he seemed even more concerned. That's just my takeaway. Maybe I'm reading too much into it.
Well, so they referenced the last time that I believe Andrew also interviewed him, and I want to say it was in May of this year, and he was very bearish. He was warning everybody about this pending sort of disaster that was going to come in the markets because of how euphoric things had gotten and the recovery and how quick it was after April. And then it didn't happen. And he even admitted in this interview, you know what, that was wrong. And then the big statement out of this one was basically it's 1999. And he even referenced the Prince song, Party Like It's 1999. And he got very specific too, October of 1999. And when you look at a chart of what happened in the NASDAQ and the S&P from October until, what was it, March of 2000, straight up. And that's the point when things started to get overwhelmingly bullish, a little unhinged, right? Things were sort of off the charts. The numbers were really not making sense. Now we might argue there's stuff right now that's not making a whole lot of sense. But his point, I think, was that we're approaching a point where it's difficult to see what would stop this. It could get even more blow off toppy before it turns in the other direction. So if we're looking at this as PTJ says, October of 99, there's still quite a few months left.
October of 99, I think, and this is from somewhat of memory, I think the NASDAQ was around 3,000 or so, and it proceeded to go to about almost, I think, 5,000-ish by the spring of 2020, March, April, and then obviously we know what happened from there. But I think I'm glad you brought that up because what he's talking about now is, it feels as though late innings, but the late innings seemingly is when things can rally the most. Obviously, that didn't happen for the Yankees over the last couple of days, but it may happen in the market where you get this sort of ramp up into year end, and it's eerily reminiscent what happened in the fall 26 years ago. But then you recall what happened in the spring of 2000, and then obviously things went pear-shaped pretty quickly. So we'll see if those corollaries hold.
Well, so one of the other things that he mentioned too was that in a bull market where you see the strongest returns is actually the last 12 months of that bull market. And then Mike Santoli mentioned on CNBC today, I don't remember the exact numbers, but it was something along the lines of the 3-year annualized return on the NASDAQ being 28% right now. And back in 98, I believe it was also 28%. But then the 1 year following that, it was up another 86% or something of the sort, right? Again, I might not have those numbers exactly right, but you understand really the message here is that the trend could be intact. And that was the same point that Paul Tudor Jones was making this morning, that even if we've come a long way up until this point, really the strongest returns, if we're talking about this being late 1999, the strongest returns could end up being in the next 6 to 12 months.
Yeah, which would be amazing. Now, I would, not that I'm pushing back, but what I'll say, and sort of just to sort of build upon that, I'm of the belief that things happen much faster in today's world than they did then. So, 6 to 12 months, 99, 2000 might be 3 to 5 months now. It remains to be seen. I think what also may be different this time, much different landscape geopolitically. You also have a much different landscape in terms of, well, in some ways different, in some ways very much the same in terms of some of the valuations, but just in terms of the absolute dollars that we're talking about, seemingly dismissive of it. But you're talking about things that historically we've never seen before, and growth rates that need to continue. I don't want to say in perpetuity, but for the foreseeable future in order to justify some of these valuations.
Well, and another thing I want to say too, just let's be very clear when we're talking about this possibly being something like October 99, in order to actually capture the rest of whatever that rally might be, you'd have to also time the top, right? Which is impossible. So when we say this, I don't want to say this almost dismissively and say, well, there's more to this rally to come. And then if you just time the top right and sell out before it turns into 2001, everything's going to be fine. It's going to be nearly impossible, if not entirely impossible, for people to really get that right. We won't know that we've already hit the top until the top is behind us. So I just want to get that out there too.
Well, fair enough. And, again, when he talks, I listen. He mentioned that, what he said in May turned out to be wrong. But again, he's looking at some of the same things that we've been looking about. He's probably just, I don't want to say confused. I mean, I think he's somewhat perplexed in terms of, the resilience of this market in the wake of things, in the face of things that, historically have been market negative. Now, let's turn our attention here to some other things. We're not going to get any economic data. So, not only is the Federal Reserve flying blind, but in terms of some of the things that you do, you're obviously flying a little bit blind as well. So that I don't think changes your work, but I think it skews it a little bit in terms of what you need to look at. So let's just say this lasts for the foreseeable future, this government shutdown. How do you make the pivot to not getting data and then still being able to do your work?
Well, it is difficult because there isn't much to react to in real time. We don't have economic data coming out that's going to move markets or change Fed rate expectations. Fed speakers are things that we can still react to. We can obviously react to market stuff. And I think this is a time where we're going to have to turn a little bit more towards technicals and just what's happening in the market. Is there internal strength in the market? Meaning, is there a broad-based rally going on? Are some of the smaller names picking up the slack? What's the advanced decline ratio on an up day versus a down day? That sort of stuff, to just keep a finger on the pulse of what investors are thinking and doing. The other thing that we can do is when we're not getting data on the US, we can look outside the US. And thank goodness there's a lot going on outside the US, Japan
Yes.
in particular. There's still a pretty strong trend in emerging markets, led largely by China, but there's other stuff going on there as well. And then there's plenty to look at in things like the gold market. There's still things going on in the treasury market that we can pay attention to. So we just sort of shift our focus away from macro data, look at market data, look at international, and get into some of the technicals.
Paul Tudor Jones mentioned 1999. It was 1989 that the Nikkei made an all-time high. I don't know if I'm even saying it right. Nikkei made an all-time high of about 39, 40,000 or so. I think it was December of 1989. And then it spent the next, 20 years basically going sideways to slightly lower. We've just eclipsed that, which is amazing, given what's going on there. I mean, maybe it shouldn't be all that surprising given what's going on globally. But since you mentioned Japan, you have a dollar yen now that's above 150 for the first time in, I want to say maybe the summer-ish. I'm probably off by a little bit. I want to say it's middle of July, but here we are. What are your thoughts on just some of the things going on there? Because you have the currency weakening, you have rates going higher, you have their markets going higher. I mean, a lot of things that may or may not make sense.
Well, I tweeted about this earlier today, and this is what's driving a lot of the big moves today. So there is basically news that a pro-stimulus leader may be coming into power in Japan. So some of the things that happened, the Nikkei at that point was a 5 standard deviation difference, right? It was up 5%. The yen, as you mentioned, was down 1.6%. 30-year JGBs had hit a high that hadn't been seen in a very, very long time. So a lot of movement going on in that market on the expectation that, okay, if Japan's economy has been relatively left for dead for the last 20, 30 years, a very long time, maybe this stimulus is the thing that finally pulls it out of the doldrums. That could be the case. We know that markets always react to this stuff when the news happens, not necessarily when the event happens. So we don't know what would happen yet. We don't know if stimulus would fix all that ails Japan, but it is something to watch. And, Japan used to be a market. I remember in the 90s. Now, I was, in high school, middle school and high school, but I do remember in the 90s feeling like America was very threatened by Japan
Yeah.
and threatened by the technology that was coming out of Japan and the auto market that was coming out of Japan, and that it was going to take over and that we would no longer be the most successful or richest country in the world because Japan was the big threat. And my, how times have changed. Right now we look to China as perhaps that threat, but that threat never really came to fruition back in the 90s. I'm not saying that it's going to come out again as a real credible threat, but their economy has been pretty much flat to nowhere since then. So maybe this is the thing that turns it around.
I'm glad you brought that up because it was then back in those days that citizen Donald Trump was talking about Japan in the same way that he talks about China today. And you're right in terms of the threat. I mean, the technology threat, the automotive threat, manufacturing threat, it was all seemingly coming from Japan. And a lot of people thought they were leaving the United States sort of in the dust. And for a period of time, that was true. I mean, you couldn't throw a stick without hitting a Japanese product back in the day, especially electronics. But to your point, how things have changed. But what's changed now is the rhetoric around instead of Japan, it's China. The other thing that may be slightly concerning, I don't know, I continue to watch this, is you just mentioned JGBs, but with all that's going on in Japan, they are still one of the largest owners of our treasuries. And, I watch this TLT and look, it's not doing anything either up or down. But with that said, it's not like it's off to the races on the upside. It's not like yields are cascading lower. You still have a TLT that's been sort of flatlining for the better part of 2 years, basically since October, November of 2023. Again, I think I'm in the minority of people that think TLT is going significantly lower, meaning yields are going higher. I don't know how you come down on it now, given all the things that are going on. But I thought I knew what that meant for equity markets. Maybe I'm just looking at the wrong things.
Well, let me ask you this. What do you think would drive the TLT lower and yields higher? Inflation, lack of confidence, deficits, all of the
Yeah,
above?
so that's always, those questions. The answer is, but I'll try to be specific. I think at this point it's a confidence thing, and as much as it is an inflation thing, without question, as much as it is a debt problem, a global yield thing, I think now confidence comes into play as well. And I think with each passing day that this shutdown lasts, I think the world watches, and the bond market is at its core is a confidence game. Not to say they're going to be failed auctions. I'm not suggesting that's going to happen, but I do think as this continues, the market's going to demand a higher rate of interest to buy our debt. And again, we're late 25 now. In 26, a lot of debt rolls, and you can continue to sort of fund the government with bills, and we'll see how long that lasts. But at some point, you got to go farther out on the curve. And I don't know what happens if and when, Liz.
Yeah. Okay. So if we're talking about it being a confidence issue, I would agree. I think that that is definitely a risk to the TLT here. I said this last week. I don't have anything scientific behind this number, but to me, if a shutdown lasts beyond 14 days, that's when confidence starts to really get shaky. Because right now it's sort of like, oh, this is cute, right? They're having a fight. But you last longer than 14 days, people have missed paychecks. We're probably going to hear about more permanent layoffs. You've got government labor numbers that are going to now affect the data going forward. So that's when it starts to be more of a serious thing. Now, in the first Trump term, the longest shutdown was 35 days, and the market did pretty well during that period. Again, there was a lot different stuff going on in the background that I think the market was more affected by and was driving the market higher at that time. So I don't think it really had much to do with the shutdown whatsoever. But 35 days is that high watermark. If we start to approach that and go beyond it, then I think the confidence thing really begins to take hold. As far as confidence after that, I think the other confidence piece of this is we're in a period of time where this year international markets have outperformed the US. And, we've heard about this US exceptionalism is dying. It's kind of come and gone. Yes, it's still here. No, it's not. I am absolutely pro US. I think that US technology will continue to win. I think that you have to be invested in US technology if you believe in the future of the US economy, and it will continue to be a huge juggernaut in that story. But reality and numbers tell us that there are markets around the globe that are doing better than here. And the gold market is doing better than the US stock market. So I think some of that will start to weigh on people as well. And as investors start to look outside the US for better opportunities, it's going to take a while because our muscle memory says stay here, only invest here. But when people start to look outside and realize that there are bond markets around the world also offering other opportunities, that's when I think you start to see pressure on the TLT yet. So my point being, I don't think that it's happened yet because it hasn't been long enough yet. If some of this stuff goes on, the confidence issues, the opportunities abroad, I do think we will see upward momentum in TLT yields.
Okay, I think I know the answer from you. I'm going to give you the answer from me. Though people will say that this will speed up the Fed's rate cut cycle or tweaking or whatever. Speeding up, I would imagine, means at some point, instead of seeing a 25 basis point cut, you see a 50, whether it's in October, which we're in now, or in December. There's no meeting in November. I do not think that's going to happen. I think you probably agree with me, but a lot of people ask that question. Thoughts?
Meaning the shutdown is going to speed it up?
No, yeah, exactly.
So I'll tell you what, it's going to be really hard for the Fed to justify a 50 basis point cut if we don't have any data to show people. So I do not think we're going to get a 50 unless there is some kind of major breakdown in financial markets that tells us that they should be cutting by 50. They can't come out and say we're cutting by 50 and we don't have labor data to tell you why. We don't have inflation data to tell you why. So I would find that really hard to believe, especially for October. Later in the year, if we have some kind of breakdown, it's possible. It's always possible, right? But I think if we have some kind of breakdown between the end of October and the December meeting, you're going to hear about it first. We're going to hear about Fed speak first, and then we'd have it baked in. I find it very difficult to believe that we're going to have some kind of major breakdown before the end of the year, unless there's a black swan event that occurs or something that surprises all of us. I think the momentum and the trend and the direction of travel, however you want to see it, is still upward through the end of the year. And then in 2026, things might get a little bit dicier because we've got a cutting cycle that we're really unsure of. And we've got a Fed that's pretty divided and a lot of seats that are going to turn over at the Fed. And the market's going to have to digest that. So we'll see what happens in 26. On top of that, the fact that I think 26 is the year when the rubber really has to hit the road on AI investments.
You mentioned the Fed and a lot of seats. What I've learned in my years is the bond market will challenge specifically new Fed chairs, but new members of the Fed as well. So we're talking about May of next year, I believe, which comes up very quickly, as you know. So we'll see. Last question to you is, obviously we've seen some M&A. We woke up today. Forget about the AMD for a second. We've talked about that, Dan and I, in Market Call. Let's talk about this regional bank deal. Do you, in your opinion, is this sort of the first of many? Is this what the market's been waiting for? Not lack of regulation, decreased regulation, M&A activity, a favorable yield curve. Those are all the things people have been pointing to be bullish these small and medium banks, small and mid-sized banks. And you're starting to see it around the edges, especially with the Russell, I think, making an all-time high today.
Okay, so if you go to I don't know, Topeka, Kansas. Well, I shouldn't say that. I'm not sure. Where's Fifth Third based?
I think it's Ohio, I want to say, but I might be wrong.
Well, if you go to some small town in middle America and ask them if they've ever heard of Comerica, the answer is probably no. Right? So let's not inflate this. And I think already media has inflated it a little bit. We're not talking about JP
Cincinnati,
Morgan
Ohio.
buying
Look
Bank
at
of
me, by the
America.
way. Let me just jump in.
Uh-huh.
Cincinnati, Ohio. Look at me. All
Look
right,
at
back to
you.
you.
Look at you. Which, by the way, if you fly to Cincinnati, Ohio, you land in Kentucky, just so everybody knows.
Yes, right
Anybody
across the
can know that
river.
it's very confusing. Anyway, and I bet there are a decent number of people in America who've never heard of Fifth Third Bank either. So, like I said, this is not like JP Morgan buying Bank of America,
True.
okay? But this is a big bank deal. Frankly, I think people thought that this would start to happen in about January, February of this year. So, we're probably even a little late on this cycle, but then the whole tariff thing and the market disruption threw everybody off, and we hit the pause button on a lot of the M&A that I think investors expected earlier this year. And a lot of the calls on financials at the end of last year and into this year were based on the expectation of this type of M&A. So here we are. It's happening. It's happening about 9 months after everybody thought it would. But this is still just one deal. I do think that if we add all of this together, and I know I say this so many times on our programs, if we add all of this together and this stuff continues, it'll be another one of those tallies on the board that we'll look back on a year from now, 2 years from now, and say, aha, that was another indication of some of this euphoria, another indication of overspending, or whatever the case may be. I'm not saying that this is a deal where anybody overspent, but it's an indication of increased activity. However, we are not at a level right now where things are super duper scary. Some of these numbers are scary when you hear about trillions of dollars instead of billions of dollars, right? That's going to start to set off alarm bells. But we're not at a level where the IPO market is completely unhinged. We're not at a level where these deals are happening, left and right every single day, multiple times a day. So we still may get there. And this is certainly a path towards that. But I don't think we're there yet.
Elizabeth Thomas, she of SoFi, Guy Adami of the Risk Reversal. I am rooting for a Yankees Brewers World Series. Back in the day, the Milwaukee Braves. If you remember, for you people old enough to remember, Hank Aaron actually played in Milwaukee. People don't know this. He was a Milwaukee Brave. So who knows? Maybe we'll get some reminiscence of those, late 50s, 60s types of situations. I think that
Yeah.
would make you happy, Elizabeth.
Oh, it would make me so happy. I mean, I'm trying to take it one game at a time. I'm trying. I'm not doing very well at that, but I'm trying to take it one game at a time. I hope that we win tonight, and I'm looking forward to the rest of October.
I always look forward to seeing you. You'll be with us on the market call this week. Elizabeth Thomas, Guy Adami. We'll see you later.